Hi, welcome to the Market Alert for the 27th of July 2017. And starting off with the pound for yesterday, we can see that the market put in a buy signal. Also, prior to this, notice this bar here. Market went down, hit the support there at 130, and also notice how much the volume came off the lows as well. Now, as prices started to move higher, you can see there they moved higher to the entry price after we got the buy signal, and then the market came back. Now, there's two things that's important here. Normally I'd say, well, look, this market's likely to find weakness, as I said in yesterday's Market Alert. But when you understand the volume and the price action, and I'm going to throw something else on here in a second as well, but most importantly, I've spoken about these bars many times, and I'm looking at ways of actually programming these in. When the market comes off the lows within the 50% of the range of the bar, below the 50%, either in thirds, it doesn't matter what you divide it, but the volume is the greatest volume that's been seen, we know that the market's likely to move higher, and that's precisely what happened. Here you can see prices moving to the upside there. Also, if we have a look at the fib retracements as well, we can see that the market, I'll just delete that again and let's try that again. Fib retracements, so from the recent low to this high, you can see that the market also comes back to this area as well, bang on the 76%. So when you can read the individual price bars and then you look at the sort of bigger picture of what's going on as well, you've got support here, the market fills the entry price, then it comes back, we've got the buying volume, the market sitting on the 76%, and then finally what's also important here, and let me use this one, you can see here that the bars following the volume is lower as well. So you know that the selling that took place in this bar, we can see that it was brought back because we've got the market coming off the lows, it's at the 76%, and then the market's free to make its way to the upside there. Again, there's plenty of videos about this in the training section of the members website as well, so have a look at the test bars and how the volume can be read in conjunction with the price activity, and then use this as a predictor of where the market's likely to move. And then just going forward off this, you can see that here the market breaks above the resistance where we had the market stop here before it came back and found new buying and then moved higher. And then of course you always get the consolidation, as it were, before the market then continues to move higher on the overnight market. In the daily chart of the pound, you can see the market's broken out of the 131.25 level and moving to the upside there. Notice also yesterday is an increase in volume as the market drove up to the 131. You need to see an increase in this if the market's going to continue higher. While we're talking about the pound, let's just have a look at the US dollar index as well. This is a daily chart of the dollar index, which is a basket of currencies traded against the US dollar, and you can see the trend has been down all the way since Trump was inaugurated. And if we look at this in a bigger time scale, let's have a look at this in a weekly, you can see precisely what's going on. So this is good news for the pound, it's not good for the US dollar, and there are quite a few articles around now where they're sort of predicting that there could be this coming into the US dollar, which of course is going to have an adverse effect upon the pound, and the pound move lower because the US obviously is seen as the world reserve currency and they want it to look a bit stronger. So again, just keep that in mind. Also in here you can see that we've got a lot of support across here for the US dollar, which means that in the pound, of course, you will potentially see prices reverse off the 131 area as well. So again, when you see the bigger picture of everything, it makes life easy to sort of predict and forecast where things are likely to head to. In the Dow for yesterday, well, we had the same thing as Tuesday, and as I've said before, I'll say it again, when you get the up move in the pre-market session, then what happens in the main part of the session is prices become sideways. To add to the mix, we had the crude oil inventories yesterday, and also of course we had the FOMC minutes as well being released, and this just led to the market trading in a sideways range. When the minutes were released, we got this bit of a lackluster up move, and as again I said in yesterday's market alert, the last 2 years the market has been no reaction to the FOMC, and that's precisely what we got yesterday as well, with prices trading sideways there. In the daily chart of the Dow, well, we've got a new all-time high. That's coming in at 21,737. We know where this is going, 22,000. That's the next upside target for the Dow. Volume is relatively low. It's start of the summer. Liquidity is down a bit, and this allows the traders to do what they want to do. And as I keep saying, and I'll keep saying it, they want the market on the highs. They want them to remain on the highs until at least at the autumn. We have the debt ceiling issue that's going to be approaching at I think it's middle September. I'll check the details on that. So expect the market to continue higher with the odd day like here, 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 and here, but as soon as that's out of the way, then the market reverses and is brought back to the highs there. On the news front today, what have we got? Let's have a quick look. Mainly US 130, the weekly unemployment claims, durable goods orders, and core durable goods at 130. No news today. Watch the market in the pre-market session. If they move it to the highs again, you may see a pullback today, because we've had 2 days where the market's actually moved higher in the pre-market session. If there's no activity in the pre-market session, you may get something in the first part of the main session at 2:30. So again, just think these things through, look at the variables, look at the patterns of what's actually going on at the moment. So no movement in the pre-market session. You could have a bit in the main part of the session initially. So that's the news for today. Not an awful lot, and nothing out in the main part of the session. So once the first part of the session's over, the evening session is likely to be sideways, barring any sort of geopolitical event or news. And finally, in the implied volatility, let's have a quick look. But before I do that, I'm just going to go over to the implied volatility website. Had a quick question yesterday about this, because they've changed things on here, and it took me a moment or two to figure out how to get the prices for the spreadsheet that I keep. So what you do is you come to the login, put your details in, click login, and then where do you go? Because you can't see any search facility or anything. It's an absolute nightmare. Certainly not user friendly. But what you do is you come up to My Services, and then down to Basic Options. You then have to come down to Symbol, and this will come up with the S&P. It's because I've already been in here this morning and had a look. And you type in the usual, take the caps lock off, DJX, and then you click on Go. And then as you scroll down here, you'll actually pick it up here. You don't actually have to click on the chart. You've got the IV index mean there, 693. But if you want to see the chart, come down to the bottom right, click on the chart there, and then you've got that 693 again, and there's the chart. So let's have a look at this in the spreadsheet, where it's a lot clearer. You can see what's actually going on. But that's how you, following the changes they've made at the iVolatility.com website, that's how you actually navigate to the Dow Jones volatility if you want to see it online. Let's have a look at the graphs that I actually produce. As I say, they're a lot clearer. And in the implied volatility, we can see that prices have gone from 703 to 693 on the Tuesday to Wednesday session there. So another low, but not as low as the 624. As the market approaches the 22,000 level in the underlying market, it'll be interesting to see if this either picks up or the market breaks the 22,000 and continues higher. As we saw yesterday, we're in a situation where we've had the longest run in stocks for the last 90 years without a retracement or correction in the market. and as I've always said, and I'll maintain, the lower this number goes, the bigger the correction will be when it does turn up. So that's it for today. And again, keep an eye on the market in the pre-market session. You know the rules for that, and the thinking behind that, and we'll see what happens when the main session opens. Right, that's it from me. As ever, thanks for watching. See you in the next one.